Hello everyone, welcome to Brilliant Bankers. In this session, we'll be discussing about the digital payments in India or the digital payment system in India. This mainly includes two things, that is the online banking and the electronic banking. So coming to digital banking, which is also known as the online banking or electronic bank, it refers to the digitization of traditional banking services and the processes. So this transformation leverages technology to offer customers convenient, efficient, and secure ways to manage their finances remotely without the need to visit a physical bank's branch. So the digitization of the banking has come a long way from the early adoption of the computers, that is from the early ages, that from the 1970s to the 80s, and the usage of ATMs and online systems in the 80s and the 90s. The emergence of internet banking in the 1990s, the usage of mobile banking, and the emergence of the fintech technology like the blockchain and the cryptocurrency. And finally, the latest thing, which is the AI and the machine learning, which started all in the 2010s and it is still on the upgradation process. Also, we can say the open banking facility that has already started. Overall, the journey of digitization in banking has been characterized by a gradual shift from the traditional brick and mortar branches to a digital channel driven by advancements in technology and the changing consumer preferences. Also, we have to take the regulatory developments also. Overall, the digital banking offers numerous benefits to both customers and the banks, which includes the convenience, accessibility, the cost effectiveness, and improved operational efficiency for the bank. However, it is also possessing some challenges, such as the cybersecurity risk, regulatory compliances, and the need for the continuous technological innovation or updation to stay competitive in the rapidly evolving digital landscape. So, so as we are talking about the journey of the digitalization, we have to learn about the different payment systems that are from the global and the Indian payment systems. So let's start off with the global payment system. Global payment systems play a crucial role in facilitating swift and secure financial transactions across various regions, each with its unique characteristics and functionalities. There are different payment systems in the United States, the United Kingdom, and the European Union, which all from a very high value interbank transfers form a real time gross settlement system. These payment networks form the backbone of the modern financial infrastructure, enabling seamless fund transfers and contributing to the economic growth and stability of different transactions. So let's discuss about the transactions in the United States. We will start off with the CHIPS, that is the clearinghouse interbank payment system. So what is CHIPS? CHIPS is a real-time gross settlement that is operated by the clearinghouse, which is a private sector organization owned by major banks. It is primarily used for high value and time sensitive transactions such as the interbank transfers, large corporate payments, and transactions involving financial institutions. Normally, CHIPS settles payments in the US dollars and facilitates both domestic and international transactions. The transactions through CHIPS are settled individually and immediately without batching, providing finality and reducing the counterparty risk. So when it is settled immediately or individually, it is as in the IMPS that is carried out now in India. So CHIPS, this is one of the main interbank payment systems in the United States. The other one is the FedWire Fund Services. It is operated by the Federal Reserve System, specially or specifically the Federal Reserve Bank. It is the primary electronic fund transfer system that is used by the United States financial institutions to electronically transfer funds between accounts held at a Federal Reserve Bank. FedWire operates on a real time gross settlement system the RTGS system, meaning each transaction is settled individually and immediately. It is used for large, time critical transactions such as the interbank transfers, treasury transactions, and other high value payments also. Normally, the Fedwire operates during the business hours of the Federal Reserve Banks only. That is typically from 9 a.m. to 6 p.m., which we say that Eastern time in the US, and they are on holidays. The Fedwire Fund Service is having holidays during the federal holidays. Coming to the Automated Clearing House or the ACH, it is a batch processing system for electronic fund transfers between the banks, again in the United States. It is used for a variety of transactions, that is, including direct deposit of payroll, recurring payments such as the utility bills and mortgage payments, the business to business payments, and person to person payments. ACH transactions are processed in batches and settled in 1 or 2 business days, providing a cost effective and efficient means of transferring funds. So there is a delay in the transaction because here there may be a delay because it is settled in batches and settled in 1 or 2 business days. Again, ACH transactions are typically used for lower value transactions compared to the chips and the Fedwire. And also, this automated clearing house is governed by the rules established by the NACHA, NACHA, that is a National Automated Clearing House Association, and operated by the Federal Reserve and the Clearing House, among the other private sector entities. Let's have a look into the payment system of the United Kingdom, wherein we'll be discussing about the BACS. What is BACS? BACS payment system or the Bankers Automated Clearing System. Earlier, it was known as the BACS, Bankers Automated Clearing System. Now it is called the BACS Payment Schemes Limited, which is responsible for the clearing and settlement of UK automated direct debit and BACS direct credit and the provision of third party services. It is a subsidiary of Pay.UK, which was formerly known as the New Payment System Operator, the NPSO. And the other one is the CHAPS, the system as in chips that is used by the UK. In CHAPS, the Clearinghouse Automated Payment System. This is a company that facilitates large money transfers that is denominated in British pounds or the Great Britain pound. CHAPS is administered by the Bank of England and is used by 30 participating financial institutions. Over 5,000 additional institutions also engage with the system by the way of partnership agreements with the 30 primary members. CHAPS is used by large financial institutions that need to transfer billions of dollars currency every day. To assist in these transfers, CHAPS enables real-time fund transfers and can accommodate frequent large transfers with virtually no delay at all. The speed of CHAPS also substantially eliminates the risk that the senders will cancel their transfers before they are being accepted by the recipient. Next, we'll be going through the European Union payment system. So, what are the different payment systems in the European Union? The first one will be SEPA or the Single Euro Payments Area, and the other one will be the SWIFT, that is a Society for Worldwide Interbank Financial Telecommunication. So let's discuss about SEPA. It is a harmonized system for euro-denominated bank transfers within the European Union and associated countries, which enables cross-border payments as easily as the domestic ones also. The SEPA is a system of transaction that is created by the European Union. It makes possible for people doing businesses in these countries to make the cashless payments across borders with the same cost and convenience of the domestic payments. The single euro payment area is approved and regulated by the European Payment Council. Coming to the SWIFT or the Society for Worldwide Interbank Financial Telecommunications. This facilitates international money transfer between banks worldwide. SWIFT is a member owned cooperative that provides safe and secure financial transactions for its members. This payment network allows individuals and businesses to take electronic or card payments, even if the customer or vendor uses a different bank than that of the payee. SWIFT is the largest and the most streamlined method for international payments and settlements. It also works by assigning each member institution a unique ID, which is called a BIC number. The identification or this identifies the bank's name and the country with the city and the branch. So these are the two different types of payment systems in Europe, that is a SEPA and the SWIFT. SWIFT being used in a large number by different countries also. Coming to the Indian payment systems, we are not going into the payment system. We will be learning about the National Payments Corporation of India initially, because this is the main corporation that starts our payment system or initiated the different payment systems in India. Let's have a brief knowledge about the NPCI. The NPCI, or the National Payment Corporation of India, was established in the year 2008 as a not for profit organization under the guidance and sponsorship of the Reserve Bank of India and the Indian Banks Association. It was founded with the primary objective creating robust and efficient payment system to drive the financial inclusion and promote digital transaction across India. So what was it? It was formed in 2008. And NPCI was incorporated as an umbrella organization for retail payment in India. It was founded by a consortium of major banks and financial institutions to address the growing need for modernization of payment infrastructure and expanding the financial services to the underserved. Coming to the next one, the payment systems. NPCI introduced various payment systems. That is, from the period of 2008 to 10, NPCI began launching various payment systems like that of the NEFT and the IMPS to facilitate electronic fund transfers and enable instant payments across the country. 2010 to 16, during this period, MPCI introduced additional payment systems such as the RuPay, a domestic card payment network that was aimed at promoting the electronic payments and reducing the risk of the people. Coming to a different type of payment systems that was started by NPCI. The first one being the NEFT. It was introduced in November 2005. It is operated and managed by the Reserve Bank of India, the central bank, and it also enables individuals, firms, and corporates to electronically transfer funds from one bank account to another within the country. So transactions through NEFT are processed and settled in batches with a multiple settlement cycle during the day. That is, you have a batch every half an hour. Then comes the RTGS, which was launched in March 2004. It is also operated and managed by the Reserve Bank of India and is a real-time fund transfer system that facilitates large value transactions between the banks. Unlike the NEFT, RTGS transactions are settled individually and immediately, providing a real-time functionality, and RTGS is primarily used for high value transactions. Then comes the IMPS, or the Immediate Payment Service, which was introduced in November 2010. It is managed by the NPCI, a non-profit organization owned by the major banks and regulated by the RBI. IMPS enables instant and 24/7 electronic fund transfers between the banks and the accounts using mobile phones, internet banking, ATMs, or the bank branches. It is widely used for a person to person transfer, the utility bill payments, and merchant payments. Coming to the point of UPI, it was launched in August 2016 and managed by the NPCI. It is a real time payment system that allows users to instantly transfer funds between bank accounts using a single identifier called the VPA, or the virtual payment address. UPI has gained a lot of popularity for its simplicity, convenience, and interoperability across the banks and payment service providers. It is widely used as a peer-to-peer transfer, merchant payments, and bill splitting facility. And at last, coming to the BBPS, the Bharat Bill Payment System. This was launched by the NPCI in 2017, offering a centralized bill payment platform that allows the consumers to pay various bills, that is, including the electricity, water, gas, and telecommunication through a single interface. So, these domestic payment systems have played a significant role in driving the digitalization of payments in India, promoting financial inclusion, and enhancing the efficiency and security of the fund transfers within the country. They are all regulated by the Reserve Bank of India and managed by NPCI, ensuring interoperability and adherence to the regulatory guidance also. A basic knowledge about the Payments and Settlement System Act, that is the PSS Act 2007. It is a key piece of legislation governing India's digital payment landscape. So let's break it down to its key aspects. What is the objective of the Act? It is to establish a framework for regulation and supervision of payment systems in India. It designates the RBI as the authority responsible for overseeing all these systems, and it ensures smooth operation, stability, and efficiency of payment systems. The key provisions being, the payment systems cannot operate without any authorization from the RBI. This ensures adherence to regulatory standards and safeguard the consumer interest. The standard and oversights. The RBI has a power to determine the standards for various aspects of payment systems also, which including the format of the payment instructions, transfer timing, and participation guidelines, which fosters a level playing field and promotes secure transactions. The Act also provides legal recognition to netting and the settlement finality. Netting refers to a process of offsetting payments between participants in a system, while settlement finality ensures the irreversibility of any complete transaction. This enhances the efficiency and reduces risk also. All in all, a mechanism is established for resolving disputes arising between the RBI and payment system providers. This ensures a fair and transparent process for addressing different disagreements. And at last, coming to the impact of the PSS 2007, it has played a crucial role in promoting the growth of the digital payments by creating a stable and secure regulatory environment. The Act has fostered trust and encouraged wider adoption of the digital payment methods. By protecting the consumer interest, the Act focuses on standards and oversight safeguards, wherein the consumers against potential risk associated with the digital payments. It also provides a framework that allows for innovation within the regulatory boundaries, enabling the development of new and efficient payment systems. All in all, the payment systems or the Payment and Settlement Systems Act has been instrumental in carrying or creating a robust foundation for India's digital payment revolution. The RuPay or the RuPay card, the Indian domestic card network. RuPay is India's indigenous card payment network, which was brought in competition with the Visa and the MasterCard, which was launched in 2013 by the NPCI again. It aims to provide a robust and secure, affordable alternative to international card network like the Visa and the Master. So, what was the objective of the RuPay card? It was to promote the domestic transactions, like encouraging the domestic transactions to stay within the Indian financial system by boosting the economic growth, by reducing the transaction costs, wherein the lowering of processing fees compared to the international networks benefit both for the issuing bank and the consumers. This also brought in the financial inclusion by facilitating wider card adoption, especially in the rural and the underbanked areas, by offering cards with lower issuance and the maintenance charges. Also, with the data security that they are having, the transaction data is processed within India, adhering to the domestic data security regulations also. Where in the case of the Visa and the MasterCard, The transaction data is being sent back to the US and which is being saved over there. Advantages of the RuPay cards: the lower transaction cost. RuPay cards typically have a lower merchant fee compared to the international cards, potentially leading to savings for consumers. Many government schemes and subsidies are disbursed directly through RuPay cards, promoting the financial inclusion. These cards are widely accepted across the ATMs, POS terminals, and online merchants in India. So many RuPay card offers attractive reward programs, cashback offers, and also insurance benefits for which people are going as a volunteer for RuPay cards. Coming to the last thing, the futures of a RuPay card or a security futures. RuPay card offers various card options like the classic, platinum, and select category to different spending habits and needs. Many RuPay cards support contactless payments for faster and more convenient transactions. RuPay cards also incorporate advanced security features like the EMV chip technology and PIN verification for secure transactions. So, all in all, RuPay cards provide a secure, cost effective, and future rich alternative for domestic payments in India. They contribute to financial inclusion and promote the growth of the digital payments ecosystem. We will be having a small idea of RuPay Secure. So, what is RuPay Secure? RuPay Secure is an additional security layer of the RuPay cards offered by some banks in India for online transactions using the RuPay debit cards. It aims to provide a more secure authentication process compared to simply entering your card details and password on a merchant website. There are two main variations of RuPay Secure offered by different banks. So the specific steps might differ slightly. Let's have a small overview of how it is done. Here we initiate the online purchase wherein we select the items on a merchant website and proceed to checkout using the RuPay debit card. Instead of directly entering your card details and password on the merchant site, we will be directed to a secure web page managed by the bank's RuPay Secure service. And then this is where the additional security comes in, wherein there are two common methods used by the RuPay Secure. That is a OTP, where the bank sends a one-time password to your registered mobile number, and we will be needed to enter this OTP on a RuPay Secure page to verify the transaction. The other is the image selection or paraphrase. Some banks might use an image selection and paraphrase, wherein you will be presented with a few pre-registered images that has been chosen by you during the RuPay Secure setup and need to select the correct one. Additionally, you will need to enter a pre-registered paraphrase for further verifications also. And then comes the transaction confirmation. Once we successfully complete the authentication step in the RuPay Secure, the transaction details are sent back to the merchant website and we might see a confirmation message before the final payment is processed. So, what are the benefits of the RuPay Secure? It has an enhanced security by adding an extra layer of authentication beyond just our card details and password. RuPay Secure helps prevent unauthorized online transactions. It also reduces the risk of phishing since we are not entering the card details directly on a merchant website. RuPay Secure mitigates the risk of phishing attacks, wherein fraudulent websites try to steal the information. With that, we are coming to the end of the session. In the next session, we will be discussing about the different Indian digital payment systems like that of the NACH, the ABPS, Aadhaar-based payment system, the AEPS, the Aadhaar-enabled payment system, the BHIM, the CTS and Grid CTS based systems, National Financial Switch, the National Electronic Toll Collection System, the Bharat Bill Payment System in detail, the forest settlements in India. All these will be discussed in the next class. We will be also discussing about the security settlement in India. So if you have any questions or queries in this session, please do not forget to update them in a comment section. Do like, share, and subscribe our channel, The Brilliant Bankers. Until next time, this is Nishant signing off, wishing you a prosperous day ahead. Jai Hind.